and claimants. There is a lot to digest, but to help us better understand not only the challenges, but also the opportunities, we are fortunate to have with us today two excellent panelists. They are Dr. Mamta Suri, former Executive Director, Insurance Regulatory and Development Authority of India. I should note that the IRDAI is an important recipient of Toronto Centre's long-term risk-based insurance supervision training. And Ms. Avinder Sandhu, Senior Supervisor, Consumer and Market Conduct at Bank Negara, Malaysia. Toronto Centre has had a long-standing relationship with the bank. This session is moderated by my colleague, Ms. Risha Goyal, Program Director, Toronto Centre. You have their bios. I hope you will benefit and enjoy this webinar. Over to you, Risha.
Thank you very much, Anatole, for your encouraging comments. I would like to reiterate that, as Anatole said, the theme of this webinar was proposed by our colleagues from Asian Insurance Supervisors, who are members of ATRI and a very long-standing partner of Toronto Centre. In addition to Anatole's observations on public disclosures, from our perspective as well, reliable and timely public disclosures increase market transparency, market soundness, as well as market discipline. Public disclosures provide policyholders the information they need to make sound judgment before entering into a policy contract. But at the same time, it is well recognized that ultimate consumers or policyholders may not have the necessary skills and tools to analyze the insurer's financial soundness as well as understand the disclosures. That's why the role of supervisory agencies in setting the standards as well as expectations is very crucial. Also, each stakeholder in the ecosystem plays a critical role in the domain of public disclosures. I feel privileged to moderate a panel of distinguished women speakers from India and Malaysia to discuss some of these issues. Just to set the theme or the pattern for the session today, the speakers will make their respective presentation on the range of themes around public disclosures from an insurance supervisor's perspective, where Dr. Suri will focus more on financial disclosures, while Ms. Sandhu will share her perspective on market conduct disclosures. We'll take questions after presentation by each speaker. You're requested to share your questions on the Q&A tab at the bottom of your screen on Zoom. So with that, I would like to invite Dr. Mamta Suri to share her perspective on public disclosures. Dr. Suri, just give me a moment to bring your presentation up.
Thank you, Richa, and thank you, Anatole, for setting the tone. And good morning, good afternoon, or good evening, depending on which jurisdiction you're coming in from. I'm Mamta Suri, and I have recently retired from or superannuated from IRDA, the insurance regulator, and I was the executive director handling issues around public disclosures as one of the various assignments I was handling. So the topic today, as Richa mentioned, is around the public disclosures made by insurance companies for various stakeholders. The most significant of these stakeholders being the policyholders and the insurance supervisor or regulator, while Avinder would be touching upon issues around the policyholders and consumer protection. I'm more on the financial sector regulations, the financial disclosures made by the insurance companies. Can we please move the slide further, please? Rich has already covered on what really the webinar today is all about, so I'll not be talking much on this. But yes, what is relevant is that the disclosures that are made in a timely manner. We are all aware that the International Association of Insurance Supervisors comes together to give the general principles or the insurance core principles which we all believe are relevant for the financial sector to perform well, and the insurance sector in particular. One of these core principles is around the public disclosures. And what it talks about is that the disclosures that are made should be relevant, and comprehensive information should be provided on a timely basis. Why I'm referring to these 2 points are that any disclosure being made will be of sense or relevance only if it is made in a comprehensive manner and on a timely basis to the various stakeholders. Being comprehensive means that the information is provided in its totality rather than part of the information being provided, because part information could well result in interpretations which could go wrong, and information if provided on other than a timely basis could actually be stale information which may not really be relevant when provided after an event has happened or too late after its relevance being there. Of course, both Richa and Anatole talked about providing the information to the policyholders and the market participants. We'll briefly cover on who all could be the various stakeholders in my subsequent slides. What is also relevant is that the information is provided depending upon the size, the nature, and the complexity of the insurance company that is existing in the market space. More details around the various aspects that are covered in the ICP I'm covering in my subsequent slides. So this will become more repetitive if I talk about this right now. All of this I'm covering in the subsequent slides, please. Thank you. Before I talk about what are the disclosure requirements that are there in the Indian jurisdiction in terms of the public disclosures, I thought it was important for me to talk also about the journey that India has taken in terms of the last over 2 decades since the sector was opened up in the year 1999 for the private sector. Historically, because of various issues, Indian insurance sector has been highly regulated, and there were only 6 entities in the insurance sector early on, that is prior to the year 2000. There were only 6 insurance companies, one each in the life and the reinsurance segment, and 4 public sector general insurance companies, whom we also refer to the PNC in the global environment. However, in the early 1990s, what happened was the Indian financial sector was going through a number of difficulties, as a result of which financial sector reforms were undertaken in the year 1992. The reforms in the insurance sector were the last to be taken up, and only in the year 1999, the insurance sector witnessed financial sector reforms. The major of these reforms were that the private sector was allowed to enter the insurance space, foreign direct investment was permitted in the insurance space, and channels of intermediation beyond the brokers and the agents were permitted to operate in the insurance space. One, of course, important segment of the reforms also was the setting up of the Insurance Regulatory and Development Authority, that is the IRDA. Today, the sector has achieved a number of milestones given the journey that we have undertaken over the last 25 years. Now, who are the stakeholders at which various disclosures are expected to be made, more particularly the public disclosures around the financial statements? Naturally, it is the shareholders being the promoters and the investors, promoters being the ones who are setting up the insurance companies, and also the prospective investors. The concept here being that the investors would naturally not want to continue to be holding the shares of an insurance companies for all times. So, basis the intent to make a gain on the investment, they would be coming in or out of the insurance companies. There also are the prospective investors who would want to come in at a later stage. So, they would like to know as to what is the performance of an insurance company and how really and when really they can invest. The policyholders, naturally, any person who wants to invest or take a policy in an insurance company is interested in knowing as to whether the company in which he is picking up a policy would be able to meet his claims or not. So naturally, they are interested in the financial health of the insurance company. The regulators and supervisors, naturally, we are interested in knowing the companies to whom we have given the registration to operate in the financial space in the country, how these companies are performing. The intention being that any company which has been set up in the insurance space in a country or a jurisdiction should be able to meet its claims at various points of time, and should not should remain healthy as it goes on over a period of time. So naturally, the financial regulators are interested in knowing how the company is performing. Simultaneously, the policyholders, various government agencies are keen to know as to how their various policies are operating, and whether there is a need to tweak on these policies. And if there is a government agenda or the regulator's agenda, they would like to know details about various aspects of the financial performance to understand as to whether and when there is a need to make changes in the policies. So, naturally, they are interested. What is also critical is that one of the important persons who share information in the insurance space or the financial markets are the analysts. These include the credit rating agencies and also the people who are analyzing the various companies and bringing out reports in the newspapers or various journals. For them, it is equally important to understand as to how insurance companies are performing. So, financial information is critical for them as well. And normally a question would be asked as to whether, the interest of the stakeholders vary from each other. I would say not really, because all of them together make the whole, and each stakeholder being important, the information and the interest of all stakeholders are intertwined. The nature of disclosures naturally therefore vary in terms of what is disclosed to the supervisors and the regulators. Certain information is put on the websites of the insurance companies, and further certain information is put on the newspapers. Since the publication of news or advertisements in the newspapers is an expensive proposition, frequently more detailed information is available on the website of the insurance companies. In addition to this, there could be information that need not be available to the general public and the various stakeholders outside the regulator's office. Therefore, frequently we as regulators would ask additional information to be provided, which is not available on the websites for the analysis and oversight of the regulator. In terms of the periodicity of the disclosure, this could be annual, half yearly, quarterly, or monthly. In certain cases, certain disasters happen, or there are immediate policy objectives, in which case the information would need to be placed on the regulator's site on a need based basis. In addition to which, there is, of course, the obligation of the insurers to ensure that all times the company that they are managing continues to remain healthy. And if there is something which has caused any impact on the performance of the insurance company, be it an internal matter or an extraneous matter, that needs to be reported to the regulator immediately. And there, we as IRDA believe that the appointed actuaries and the CEOs are the most critical components and the face of the insurance company, and they need to come to the IRDA saying that this is an event which has happened, which can cause and impact the financial performance of the company, and we would like to share this information with you. What the regulator also does is that we have two kinds of channels open with the insurance companies. One is where we meet with all of the insurance companies on a regular basis, which we refer to as Bima Manthan, where insurance companies either individually or jointly talk about the concerns that they may have for their respective entities or for the sector as a whole. In addition to that, they can come down and meet us at any point in time to share any concerns they have and to say as to how and when these concerns need to be resolved with the support of the regulator. So, all of those channels of communication are available through the regulator. Richa, can we please move to the next slide? In terms of where the prescriptions come from, there is the statute, that is the Insurance Act, and the rules that the Government of India frames, which are referred to as the insurance rules. In addition to this, there are the regulations that are framed by IRDA. Particularly on the financial disclosures, there is the financial statements regulations that have been put in place by the regulator. In addition, depending on the needs and requirements, we issue circulars and guidance. Normally, these circulars or guidance are also compiled together to put in place the master circulars, which are all taken together for 1 year, so that everything is available in one place only. And based on actually our experiences, we would require the disclosure requirements to be amended over a period of time. However, what we do take into consideration is there is a need for comparability of the financial statements also, and therefore for us to be able to assess the trends, etc., and to compare data between the current financial year and the previous financial year. We do not want to make too many changes too frequently, so that's where the guidance to change is also tempered by how much of it can be done immediately and how much of it can be held back, so that the continuity of the financial statements is not tempered with. In addition, we also have what we refer to as the sunset clause for the regulations, where we say that the regulations need to be reviewed every 3 years, so that per force the regulator is looking at the regulations to see if we've lost the relevance of a particular regulation or there is a need for adding more. So that also gets incorporated in the regulatory framework that we put in place. In terms of some of the evolving issues that are there for the reporting in terms of public disclosures, one important aspect that has been talked about globally as well, and which is being discussed in the financial sector in India as well, is the environmental, social, and governance issues. There is a lot of focus on these aspects being disclosed because these are impacting the overall health of the various jurisdictions, and therefore the focus is on that as well. An important aspect that is being focused on is on the climate change. In India, we have only recently, I would say, in the current financial year, which is our April to March financial year, a lot of focus is being put by the financial sector regulators, that is the Reserve Bank of India, the Securities Market Regulator, and IRDA, in terms of bringing in disclosures on climate change. What is relevant, of course, is this is a matter which is still under deliberation and discussion between the three regulators as well. And we are discussing as to how much of this needs to be disclosed in the financial statements, in the notes to account of the insurance companies and banks and listed entities as well. But certainly, this is work in progress. But we do believe and we do understand that climate change is relevant and needs to be focused on. But of course, we do realize that just because an entity is causing an impact on the climate in a particular jurisdiction, we cannot throttle it in terms of investments being made. But what the insurance companies can push for is that changes being brought in the manner in which those entities are operating, so that the impact of their manufacturing activities on the climate can be reduced to the maximum extent possible. Diversity is another matter on which disclosures are being looked at, so that the women are given equal importance in various areas of our operations, is the area that we are focusing on. Can you go to the next case, please? In terms of the financial performance, I do understand that I'm taking a lot of time. In terms of the financial performance, there are the financial statements requirements that are there. These are put on the websites of the insurance companies. The annual reports of the insurance companies are put on their respective websites. In addition, this information is also provided on a quarterly basis, where the profit and loss account, the operating expenses, the income statement are all put on a quarterly basis on the websites of the insurance companies and provided to the regulator as well. What we are focusing on and what we would like the insurance companies to tell the various stakeholders as to what is their business performance, what are the expenses in terms of intermediation, employee cost, etc., and in addition, the claims that have been paid by the insurance companies. Claims being a very critical component for us, We also ask an additional bit of information at the regulator's office as well in terms of the turnaround times of the claims paid. We also ask information around the aging of claims, and the reasons for delays, if any, on claims are also to be provided to the regulator. In terms of life insurance companies, naturally, there is the death and maturity claims information that needs to be provided. In terms of the PNC or the general insurance companies, we require insurance companies to provide information on the claims paid on the occurrence of an event. In case there is a natural disaster, or in that case, we further put out guidance saying that the claims would have to be paid on priority basis, both for the death as well as the damage caused, so that the rehabilitation can occur at the earliest possible. In terms of solvency, that is a critical component which reflects on the health of the insurance company. The information is sought on a quarterly basis as to what is the solvency of an insurance company. Where there are signs of a company being under stress or strain, we also require the insurance company to provide that information on a monthly basis, because the disclosures would change depending on the financial health of the insurance company. So where there is stress, we ask for the information to be provided on a monthly basis as well. And where there is a need for intervention, we would seek that intervention to also happen. During the COVID times, particularly, we had this information to be provided, along with the claims information to be provided on a monthly basis. Persistency being another important element, that information is also sought both on the policy wise basis as well as in terms of premium underwritten. While for the non life companies, the contracts are 1 year contracts, but the health the quality of the business underwritten would also be reflected in terms of whether the policyholder is continuing over the next years also of the claim sorry of the policy being renewed. There also we focus on as to whether the policies are persisting, or whether the policyholder is moving from one insurance company to the other over successive years. That's another piece of information which is relevant for the stakeholder as IRDA. Notes to account, significant accounting policies, the management and the directors' reports are all relevant to enable us to understand the numbers that are provided in the financial statements. Another important aspect is the auditor's report, which reflects whether the quality of the report is in any way not up to the mark, and there are any concerns in terms of the financial reporting. We also have a half-yearly report by the auditors, where a limited audit is done by them. The actual reports are all provided to the IRDA and is not put on the websites of the regulator of the insurance companies, because that is information that will enable IRDA to assess how the actuarial liabilities have been provided in the financial statements. Can we go? Yes, please. In terms of the qualitative reporting and other various aspects that we expect insurance companies to provide information on, a lot of this is provided more to the regulator rather than being put on the websites of the insurance companies. In terms of the investments held, naturally, the quality of investments is important for the regulator, and there is a framework given by IRDA in terms of the kind of investments insurance companies can hold. We also say as to what are the exposure limits that the companies can have. Insurance companies can have in various companies, a group of companies, or an industry in particular, because naturally the intent is to see that all the eggs are not lying in one basket only, and there is diversification. But having said that, also at times, even though a lot of assessment is being made before investment is made, at times the investments can go bad. So there is a requirement for reporting on the non-performing investments also, and to see that the investments that have gone bad, the income pertaining to them is not reported in the financial statements, and there is adequate provisioning for those investments. In addition, to understand the trends in operations, a 5-year reporting is required on the financial statements, which is a summary along with the ratios, so that we, not only we, the analysts and the others, can also see as to what is the performance of the companies. The other important aspect for the regulator is naturally the governance standards. So there are the requirements around various kinds of committees being set up by the insurance companies, and what should be the composition of the board of the insurance companies, where we insist on a minimum of 3 independent directors also. So we look at whether the meetings of the companies have been held at the periodicity stipulated. The committee meetings are being held by the company, and these meetings are attended by the important independent directors. And as to the quality of the discussions held, actually the related party disclosures are important in terms of the transactions held, whether they are held at arm's length, and the quality of those disclosures are also sought from the insurance companies. The insurance companies are major investors across various companies in the financial sector and across various other companies as well. So we expect them, and this is something which is there not only in India but globally as well. We expect insurance companies to be responsible investors as well, and either individually or as a cohort of insurance companies, they participate in the voting activities so that the positive aspects of the operations can be influenced by them as well. So there is a stewardship policy to be put in place, and the compliance of that is also sought by the regulator. I already mentioned about the importance of claims. So the details of the claims intimated, disposed of, the duration of pendency, the turnaround times are all disclosed. The important aspect again is on the risk management framework. The insurance companies are, of course, required to be having a risk management committee. They also are required to be looking at all aspects of the risks that are influencing or impacting them, and their ability to bear their risks, and where they are bearing their risk on those financial statements.
It's 8 o'clock.
They should be in a position to manage those risks as well. The other aspect, of course, is we focus on the managerial remuneration being paid to the KMPs, that is the key management personnel. What is important there, of course, is that uh, the management should not be paid such a remuneration which, or rather they should be paid a package which does not result in over excessive risk being taken by them. And that's where the key performance indicators also need to be built in, and the package should be such that they're not focusing only on the top line, that is the growth of the business. They should be also focusing on the quality of their businesses as well. So all of this is required to be disclosed by the insurance companies on a regular basis with the regulator. Can we go on to the next slide, please? And these are disclosures for the individual policyholders, where they are owners of the unit linked policies, the performance of the funds they've invested in, the net asset value on a daily basis needs to be put in place, whistleblower policy, anti fraud policy, as well as the manner in which grievances are being redressed by the insurance companies are also required to be disclosed. What we also want them to give in detail to us is as to what is the turnaround time for the redressal of grievances. I think I'll move on to the last slide now. I just wanted to also give a flavor of what is happening in terms of the financial sector as a whole. Since insurance companies are registered under the Companies Act as well, they are required to comply with the disclosure requirements put in place by the Ministry of Corporate Affairs, be it on the websites or be it on the website of the Ministry of Corporate Affairs. In case of companies which are listed, naturally the securities market regulator comes into place, and their prescriptions have to be complied with. Naturally, IRDA and the SEBI work together in terms of the disclosures by the listed insurance companies, because naturally, ultimately, what is being disclosed in terms of financial performance is of the same insurance companies. So there's a lot of coordination between the two of us regulators. What, of course, additionally SEBI wants is that the price sensitive information should be provided on an immediate basis. So insider trading is a matter of concern. So that's where any information that can impact the market price of a security needs to be disclosed at the earliest possible. Any event which is an exceptional or an extraordinary event also needs to be disclosed. And if there are major changes happening in the promoter's equity stake in the insurance company, that needs to be provided so that retail and the financial investors in the stock markets know that the promoters are going in or out of the insurance company, and they should be able to understand as to the reasons for the same. One of the recent developments in SEBI's case has also been that the timelines for disclosure of material information has been further reduced to 12 hours. So, in case there is an event within an insurance company which is impacting the price, that needs to be disclosed immediately within 12 hours. And then, if there is an event which is happening in the economy which can impact the insurance company, that needs to be disclosed within a period of 1 day. In case of a board meeting being held, within 30 minutes of the board meeting being concluded, the insurance company is required to ensure that the minutes are disclosed to the stock exchanges so that they immediately know what are the decisions which are critical decisions which can impact the entity are made available to all the stakeholders. So that's where all the disclosures are being worked on in a coordinated manner amongst the various regulators operating in the insurance space, operating in the financial sector space in the Indian jurisdiction. Some of the recent things that both IRDA and the other regulators are also working on is cybersecurity. So any breaches or incidents, if they occur, they need to be disclosed immediately to both the regulators, that is IRDA as well as to the SEBI. So I think this is all from my side. I think this was the last side. So we'll take the questions once Avinda is done with her presentation. Thank you so much for hearing into me, please. Thank you.
Thank you very much, Dr. Suri. You are very much within time. So I have one question perhaps that I can raise to you now before we
Sure.
move to Avinda.
Yes, please.
And let me
Sure.
stop sharing the slide in the meantime. Dr. Suri, you touched on the gender-related requirements. Are there specific targets, and are insurance companies in India required to disclose the numbers and positions of females on companies' boards?
As of now, the targets are not there. But what is certainly happening is that the insurance companies, while they have been operating in the insurance space in India, have realized maybe it was the Japanese experience which pushed them in this direction. Is that the agents in Japan, were the women agents in Japan were getting the quality of business which was superior, and some of our joint venture partners are from Japan. So that was, so to say, a technical or a know-how which was brought into the Indian jurisdiction. And the Indian experience also has been that the quality of business that is coming in from women agents has been good. The other aspect is there are the NGOs operating in India. We've also found that where they are operating, they're basically operating through the support of women, and there too the level of business and the quality of business that has been coming in has been really good. But while we do interact with the insurance companies in terms of the diversity within the companies, as of now there isn't a requirement for disclosure, but this is something that we could certainly be think of going forward. But certainly insurance companies report to their boards in terms of diversity, and they also have targets. KPIs are there for the insurance companies as well for their own KMPs in terms of diversity, and that is a very important aspect. All insurance companies are monitoring these numbers on a regular basis. They also report to their boards on these numbers as well, which is a very encouraging factor. Thank you.
Thank you, Dr. Suri. And perhaps I would just add from a context of the board representation by women. I think there are certain requirements from the Securities and Exchange Board of India or the company's registrar, maybe that that applies to the listed companies in terms of
Sorry, I
the
missed out on that.
representation.
Sorry. I was thinking of saying it, but I missed out on that. We, as an insurance sector regulator, have also said that at least one director on the board of the insurance company should be a woman. That prescription is also there. Yes, please.
So for the insurance sector, you have mandated at least one, but I think for
Yes,
the financial sector, there may be additional requirement if it's a listed
certainly.
company.
Certainly, yes. Yeah. So there
Thank
is a
you very
requirement.
much.
Thank you so much. Thank you.
Thank you, Dr. Suri. So Ms. Sandhu, I'll bring your presentation up, but maybe if you want to make any additional comments on what was covered by Dr. Suri before you move into your own session. Thank you.
Hi, good morning, everyone. It was interesting to hear India's perspective on financial disclosures, specifically the last part on board gender representation. It did make me wonder whether we have similar requirements or not, although I'm not quite familiar with financial disclosures, but I thought that was very, very encouraging and very promising.
Thank you.
Should I start, Risha? Okay, this would be the public disclosure in the insurance sector for Malaysia. I just wanted to let everybody know that my focus here would be on market conduct disclosures. But I will very briefly touch on financial disclosures. And at the end, I would also touch a little bit on financial literacy initiatives in Malaysia. Okay. Okay, so topics of discussion are here: the mandate, our regulatory approach, key disclosure requirements, and effective means of sharing relevant, reliable, and timely disclosures, technical standards for reporting, various role of various entities within the insurance industry, and the importance of financial literacy of policyholders. Okay, we'll start with our mandate. So our mandate is quite explicit in our Financial Services Act and the Islamic Financial Services Act, where we say that the regulatory objective is to promote financial stability, and in pursuing that objective, the bank will foster safety and soundness, integrity and orderly functioning of money market and foreign exchange market, safe, efficient, reliable payment systems, fair, responsible, professional business conduct, and strive to protect the rights of interests of consumers of financial services and products. So for the specific mandate for consumer protection would be A4, which is the fair, responsible, and professional business conduct, and also to strive to protect the rights and interests of consumers. So the desired outcomes that we want to achieve here is fair dealings, fair treatment, responsible business conduct, enhance informed participation in the financial system by consumers, and ultimately sustain public confidence and trust in the financial system. Next slide. So specific to disclosures, which market conduct disclosures primarily resides in my department, which means we also write the policy for consumer and market conduct disclosures. That falls within my department, as well as the implementation, so supervising the effective implementation of these disclosures as well. So the approach is generally, it is key principles and objectives, and they are to promote transparency and accountability, to enhance consumer protection awareness of benefits and risks of insurance and takaful products and services, and to support the development of a sound, resilient, and competitive insurance and takaful industry. So if I look at disclosures in the insurance sector, they are broadly the financial statements, so the financial disclosures, and they usually go hand in hand with the corporate governance disclosures. And from a market conduct perspective, we also have product information, product disclosures, where insurers need to provide comprehensive information about their products. This is generally done at point of sale. where they include coverage details, product features, premiums, exclusion, commission charges, and other relevant information that potential customers would need to know in order to make an informed decision. Ensure on the market conduct, which is mainly business practices side, insurers are expected to disclose information on their business practice. Commitment towards treating financial consumers fairly. This is usually done on, insurance companies have to come up with a client charter, which is published on their website, which would state their commitment in terms of dealing with consumers, and commitment is such as their approach to customer service, claims handling procedures. At the same time, the bank also publishes disciplinary action taken against ITOs for any unfair dealings. Next slide. I thought I would touch on our key disclosure requirements. So we have two key policy documents that is issued by the central bank. One is our transparency and disclosure guideline, which is mainly product transparency and disclosure. This was issued in 2009. And the objective here is to ensure that consumers are given relevant information in order to make informed financial decisions, and that the information is presented in a clear, concise, and effective manner. In this policy document, we prescribe the key principles, disclosure principles, which are timely. This is what we want them to keep in mind whenever they come up with product disclosures or disclosures in their sales and marketing materials, is to ensure it's timely, it's clear and concise, accurate, relevant, highlights important information, consistent and comparable. So these are our 5 key disclosure principles. So when, as a supervisor, when I review sales and marketing materials or notifications to policyholders and things like that, these are the 5 principles that I would be looking out for. Next. We also have some other general requirements like the use of plain language. So like contracts, agreements, policy documents should be presented in plain language. And plain language refers to clear presentation of information in a manner that is easy for the readers to understand. So where possible, to avoid legal and technical jargon. We encourage the use of Bahasa Malaysia. Generally, disclosures are in English, but if a customer wants it in Bahasa, then the insurance company would have to provide the disclosure in Bahasa. And also provide product information, product disclosure sheet at pre-contractual stage to facilitate consumers to compare products. This is something that we then go beyond just being having principles in our guideline, where we actually prescribe the format of these disclosure sheets as well. And this the format of what we think the key information that should be included in these product disclosure sheets, which is supposed to be given to policyholders at point of sales, is prescribed for the various insurance products. So like if you were selling an investment link, there is a product disclosure sheet sample that we provide. If it's a universal life type product, if it's a medical and health rider, a medical plan, then we do prescribe product disclosure sheets. And we also prescribe that this PDS should be given at point of sale. And also, and there are also instances where at product renewal stage, we also may require an insurance company to provide a copy of the PDS, but generally it is during the point of sale. Next slide. I thought I'd just touch on the other policy document, which is what we call our mother policy document of all the documents in consumer and under consumer and market conduct, which is our fair treatment of financial consumer policy document. And here we have sort of listed the 6 principles, which is what we want insurance companies to look at, where we have principles for the corporate culture, where we ensure consumers' best interests are an integral part of the corporate culture and core values. We have principles for fair terms, that is to ensure consumers are provided with fair terms. Provision of information, where we would reiterate certain disclosure requirements, clear, relevant, timely information to facilitate comparison and information, informed decision making. Fair dealings, advice and recommendation, and avenue for redress. So generally, when we look at a company's conduct, business conduct practices, we would be looking to see whether they meet these principles of fair treatment. Okay, next slide. Okay, effective means of communication. So how do we ensure effective means of communication? We look at point of sale and after sale. That's how we've broken it down here. And at point of sale, in order to ensure effective means of communication to consumers so they make the right decision when they purchase insurance products, is we have standards where we have enhanced professionalism of the intermediaries to ensure proper advice is given to consumers. We have further strengthened our product disclosure standards for greater transparency and clarity to facilitate informed decision-making by consumers. And after sales, where we have online access to insurance and family takaful accounts, where we are promoting that we have been actually for a while ensuring that ITOs improve their take-up rate of online accounts, which means encouraging policyholders to sign up to have an online account where they can have easy access to policy information and policy-related forms, and they can obtain real-time updates on applications and transaction status. We also have regular requirements for regular updates to policyholders, like, for example, new notifications on renewals, annual policy statements, and if there are any revisions in premium and benefits, then the notifications to policyholder will be sent out within a specified time before effecting the changes. Next slide. Okay, these are just general technical standards of public reporting, like similar like in India, you know, when the financial statements are basically audited, and they are also available on the insurance company's websites, and they will have to abide by Malaysian financial reporting standards, which have been aligned with international accounting standards. We also, technical standards of reporting would include following the auditing standards as well. Actuarial standards in the insurance industry, actuarial standards govern how insurance assess risk, calculate reserves, determine. We also have, with regards to this, we also have prescribed certain requirements when to sort of govern how insurance industry and actuarial standards, basically what they need to follow when they assess risk, calculate reserves, and determine the appropriate premium levels. Regulatory standards, these are regulatory standards that we can issue as a central bank. They could be prudential standards or business conduct standards, and these standards will have to be complied. And they may be in the form of business, it could be business standards, it could be risk management standards, capital adequacy, and such, yeah. So this is just very quickly going the role of various entities within the insurance industry, the responsibility of disclosure. Insurers have the responsibility to provide accurate, comprehensive information, ensure that, fair terms, that consumers are provided with fair terms in contracts with financial consumers. They provide clear, relevant, and timely information. They have to comply with disclosure requirements, compliance with regulation as well, and policyholders have a right to receive clear, understandable information about their insurance policies, including coverage terms, conditions, and any potential risks or limitations. These are the roles of what the insurer should ensure and strive for. On the next slide, our other stakeholders, you can go to the next slide. Okay, policyholders, it's important for policyholders to read and understand policy documents provided by insurers. And they can also seek clarification from the insurer and insurance agent to fully comprehend their coverage and terms and conditions. Industry associations, we have a Life Association, we have a General Association, and we have a Malaysian Takaful Association. They play a role in advocating for best practices and setting ethical standards. They would encourage transparency. They encourage transparency and standardized reporting practices. Actuaries, they play a critical role in assessing risk, determining appropriate pricing for insurance products, and ensuring insurance maintains sufficient reserves to cover potential claims. And as I mentioned before, we have standards that govern the risk assessment and risk reporting. Next. External auditors, they provide the independent verification, and they provide reporting and assurance on financial statements. As mentioned earlier, these financial statements are then published on the insurer's website. Okay. I'll touch a little bit on financial literacy. So basically, in Malaysia, we have established a financial education network in 2016. You can see that this was spearheaded by the central bank, and it's an inter-agency platform comprising of 8 members. And the objective here is to raise the level of financial literacy among Malaysians and improve financial well-being of Malaysians. And it's founded on the belief that we have a far greater impact if we come together than if we act alone. And so the FEN, which is what we call them, leverages its members' expertise and resources to collectively drive efforts to promote effective delivering of financial education networks. So generally, FEN would come up with a 5-year plan on where they would set out specific strategic priorities and action plan. And then, of course, they will monitor the progress of these action plans. Next slide. This is just to give you how the national strategy looks like. I think it's a bit small. Can't really see it. Okay. The national strategy vision is to improve financial well-being of Malaysians, and the objective, as mentioned, is to elevate financial literacy of Malaysians and to promote responsible behavior. Then we have the key strategic outcomes here: to save, manage, protect your money, to plan ahead, and to protect yourself against fraud and scams, which is actually quite a big issue here in Malaysia. The approaches would be to enhance public-private partnerships with basically the FEN, network, they tie up with a lot of strategic partners in order to deliver the outcomes. And also the other one is effective outreach and communication. Nudge behavioral changes, improve access to financial products and services. These approaches affect various life stages like school children, youth, adult, pre-retirees, and retirees. And the strategic priorities are nurturing values from the young, increasing access to financial management information, inculcate positive behavior among targeted groups, boost long-term financial retirement planning, building, and safeguarding. Well, yes, I think so. Just to maybe share a little bit more, so there would be specific initiatives that different collaborations with our different partners and stakeholders, and then they would have specific action plans for the various strategic priorities. And this is monitored and I think also published on the website. I think we have a financial education network website where if anyone's interested in the specific priorities and actions that we have taken so far, there's quite a lot of information available, publicly available on the website. I think that is all for me.
Thank you, Ms. Sandhu. I've stopped sharing because the slides so that I can bring up some questions and open the discussion. Dr. Suri, I'll just bring one question which is specific to Ms. Sandhu's presentation to her, and maybe then I'll come to you to give your perspective on some of the areas that Ms. Sandhu touched upon. And is there anything that you would like to add further from an Indian context? So, Ms. Sandhu, there's one question about the insurance policies, and the legal contracts can be quite complex. How
Yeah.
do you balance the need for plain language and being consistent with legal terms and conditions of policies? And I'll just add one question from my side to the same, is in terms of the length and scale of information that is also provided to consumer or policy holders, and whether they have the ability to go through all of it, and the fine print that is sometimes hidden in those disclosures as well. So how do you balance these outcomes?
Is that for me or for Dr.
That's for you. That's
All
for
right,
you
okay.
first.
Okay, maybe I'll take the second one first, because the we understand that especially at point of sales, the sales and marketing materials, the product disclosure sheets, the sales illustration can be very lengthy. So where the bank is moving towards right now, we're actually specifying to some extent the length of the disclosure. So when it comes to the product disclosure sheet, we're saying, okay, at minimum 2.5 pages or 3 pages. We're sort of looking at behavioral science as well to see how we can change the approach. Instead of just front loading all the information, the product disclosure sheets that we are looking to, how we are approaching it now is to sort of guide the consumer in making that final purchase of insurance products. So what are the key things you have to look at? What are you, are you aware that the premiums would go up? Have you considered other products? Are you clear of these terms and conditions in place? So it's still a discussion, but we recognize that it's a lot of information that goes out, and we do look at, when we review this material, we do look at back to the 5 principles. Are this information relevant? Do you really need to replicate the same thing over and over again at various? I think you can reduce it. So those are the things that we look at when it comes to sort of not having that, so that consumers do not have this information overload, when they are deciding to purchase. When it comes to contracts, it's a bit tricky. We do look at the contracts from a fair term perspective. We do look at contracts sometimes from, are they repetition? Can they make it easier, simpler? Sometimes one sentence can be a whole paragraph, and you can't a consumer will not be able to understand. We may then tell them, can you rephrase? Of course, when it comes to technical words where it's necessary and they say, we need to have this in a contract, they explain their rationale. Then I think, if we understand why, then it's fine. But there's still a lot of room for improving contracts, not only from a fair terms perspective, but from a plain language perspective as well. Yeah.
Thank you very much, Ms. Sandhu. Dr. Suri, there are a few questions from which are specific to India as well. But before I take those, are there any other comments or feedback that you wanted to share from what you heard from Malaysia's experience?
So thank you, Richa. I think what is happening in Malaysia is probably also being echoed in India. For us as well, there is a concern that the information that is provided to the policyholders should be as simple as possible. And the information overload is certainly a matter of concern. The fine print in which the information is provided is something which would deter even the most educated, the financially most literate people also from going through. So that's where we say there is this requirement of common minimum information that be provided to the prospective policyholder, so that he knows what are the choices he is making. And the intermediary who's selling the insurance policy is required to be providing information through a sheet which provides the minimum information that will enable him to understand what kind of premiums are being paid, what is it that he's expected to pay in future, what are the kind of benefits which will accrue to him. One area in which we have had A lot of discussion is the cost of intermediation also being disclosed. But as of now, we are getting a lot of resistance on that particular matter, because we believe the moment we are disclosing that as well to the policyholders, the quality of business that is being underwritten would undergo a significant amount of change. So that is work in progress. Let's see when that part can be implemented. But certainly, what we as a regulator say is that the nature of contract should be such, the language in which it is written should be understood by a school a person who's cleared the school. He should be able to understand the language rather than being a complicated document which is difficult to comprehend and which is also a deterrent to go through rarely. So that was the piece on the information provided to the policyholder. In terms of financial literacy, yes, the financial sector regulators have got together to see that we offer a same platform through which the banking, the securities, the mutual funds, the insurance, all of that literacy is provided. And we also want to catch the people young, so that at the school level information is provided and people are able to understand the need for insurance. And we also believe that if a school going child is made aware about the importance of insurance, he can probably go back home and talk about it with his family, parents as well. And that as well can be a manner in which to increase the insurance sector penetration. But of course, all of this is long term. We have been at it for a while, but we believe that so much more that needs to be done on the subject as well. So that's it on the
Yeah.
some of the parts that Avinder had touched upon. Thank you.
Thanks, Dr. Suri. And I just wanted to add that, as we move into the digital age with the new generation and the products being offered through, online, as Ms. Sandhu touched upon, or through the mobiles, the level of information, the length of information becomes even more crucial, because I've seen in some other instances that, or for that matter, whenever we download an app, if the terms and conditions are more than 2 pages, we just scroll and accept rather than read through them. So that's very important for financial products, that we provide certain key disclosures upfront or one by one and make the consumers accept and then move to the next screen. So I think this is certainly an evolving space. So Dr. Suri, I'll come to a couple of points that you touched upon, and there are specific questions related to that. So just to address them directly, you mentioned about the requirements or expectations on disclosures for intermediaries. So are insurance companies, this commissions paid to the intermediaries required to be disclosed to policyholders? And first, maybe Dr. Suri and Ms. Sandhu, if you have anything to add to this as well. So this is for both of you.
So before I touch on the commissions being paid, of course, I think I briefly touched upon that when responding to Avinder's presentation. But still, what has recently happened is that commission payouts has been a matter of concern for the Indian jurisdiction for a while. And recently, we have made amendments to our expenses of management regulations, where we've laid down the limits in terms of the overall expenses that can be incurred by an insurance company on operating expenses, or what we refer to as the expenses of management. And we've given a lot of freedom to the insurers on deciding as to what kind of commission should be paid. So let it be their responsibility, let it be the responsibility of the board to decide as to what kind of commission is paid. And that regulation has got implemented effective financial year 23-24. Of course, half year has passed, and we still have to assess the impact of the regulation being in place. But when we were looking at the amendments to the regulations, this particular regulation, we also had a thought on disclosure of the commission payout by the insurance company. Let it appear on the face of the policy document. At that point in time, that I would say would have been about 8 to 9 months ago, but there was a lot of resistance to that. And that's where, as of now, there isn't a requirement to do that. As of now, we are expecting the boards of the insurance companies to act in a prudent manner to see that the limits on the commissions paid are within acceptable limits, but we still have to understand the impact of the regulatory change that we've made. We're expecting by the end of the year, we would know really how it has moved. But this is a tricky question, but because we believe that the more you're paying out as a commission, that will impact two things really. One is the cost of insurance goes up. The other is the higher the payout on the commission, the more an insurer would find reasons to not pay a claim when, as and when it arises. So we are conscious of both of these things. We are looking at the impact of the amendments we made to the regulations in the current financial year, and as in how the tweaking may be required on the regulations is something we will have to think of in the final quarter of this that is the next quarter of this financial year really. But this is certainly an important and critical component that worries us. The other aspect is that as insurers try to increase their top line, they may want to give more and more payouts. That means really, that risk taking and the remuneration paid to the KMPs and it being linked to the top line are all connected issues really. So I did briefly touch upon that as well, but these are matters of concerns to IRDA, and certainly if the insurers don't, should I say, behave, if I may, then regulatory provisions may need to be put in place. Thank you.
Ms. Sandhu?
So I just want to say that we have operating cost control requirements in place. We've had that for a while for life insurers and general insurers as well. We've also rolled out in 2018 a balanced scorecard for intermediaries, which means now when they are paid commission, they would have the fixed commission and a variable. And the variable commission will be based on non-sales KPIs, which means they would look at complaints, number of complaints that they have received, their persistency rates and things like that. That was rolled out in 2018. And with regards to commission disclosures, it's in the product disclosure sheet and it's also in the sales illustration. But I want to say that while it sounds also nice and easy, it's not. That every time we do issue all these policy documents, and especially when it impacts someone's livelihood, like an intermediary lives on commission and things like that, we do have to have a lot of engagements with the industry, with the associations, the intermediaries as well. We do receive, of course, pushback, but what I mentioned just now, these things have been implemented already.
And this brings me to the next question. You touched upon complaints in your response to the earlier one. So are complaints statistics required to be disclosed by insurance companies? I'll come to you, Ms. Sandhu, in Malaysia, and then Dr. Suri for India. Thank you.
Okay, complaint statistics. We internally we receive complaint statistics, but I don't think it's published on their website. I think the commitment to handle complaints in a fair, in an efficient, timely manner, the service charter bit of that is disclosed, but companies do not specifically disclose, not that I can recall their complaints.
Okay.
But any complaints, no, I don't think so.
So yes. So even in their annual reports, there is no non-financial or qualitative obligation to report on how many complaints received and resolved. It's an information which is with you.
Financial statement itself, whether they report the complaints that received from consumers, no.
Dr. Suri, anything that you have that you can share on this aspect?
So, of course, the overall picture would be for the financial year would be indicated in the financial statements. But beyond that, they need to have in place the grievance redressal mechanism, and the policy around that needs to be disclosed on the website of the company. In addition, we also have a grievance redressal department in IRDA, and the policyholder can certainly escalate the same to us, in which case we would also be, taking it up with the insurance companies. There is also the mechanism of ombudsman, where, in case the insurance company doesn't resolve the complaint, the policyholder can go to the ombudsman as well. But having said that, there are certain areas in which, much more can be done. And of course, one area is that of, mis-selling, more so from the corporate agents. That is a area that is of concern for us, and we are certainly tackling that. But having said that, it's certainly a lot of, work in progress which needs to be focused on a continuing basis.
Yeah, because from a consumer's point of view, the number of complaints, let's say, that an insurance company has can be a key indicator of
Yes.
their service, their quality of service. So,
Absolutely.
sometimes it could be a good comparison when you're looking at different policies, the different policies from different insurance companies to see which company has lower number of complaints to higher, and the type of complaints as well. Again, that's not something that's public disclosure, but from a supervisor's perspective, as you said, is it originating from mis-selling? Is it pricing? So those kind of factors are quite crucial as well in terms of assessing of quality of service and fair
So we,
treatment of consumers.
we do publish that even in IRD annual report. The comparative statements, etc., for all the insurance companies is also published. The details obtained from the ombudsman also gives a bird's eye view in terms of the kind of complaints they receive. We also analyze the complaints in terms of, what are the reasons for complaints? Is it mis-selling, the servicing, the claims being paid, or is it the intermediaries? So there are various aspects into which we've divided the, complaints, and those are certainly disclosed by IRD as well in its annual report. And where there are, some things that are coming to our notice, we certainly handle that with the insurance company as well. So we don't let it go. It needs to be focused on and is a priority. But having said that, it is also a fact that frauds are also there, and that is another area, the other side of the coin, which also is a matter of concern and focus for the regulator.
Ms. Sandhu and Dr. Suri, now again a common question for both of you. Are new insurance products required to be approved in your jurisdiction?
It would depend on the type of insurance products. So we have a guideline on introduction of new products. And so there are some types of products, and I can't recall, like products, say, for the lower income segment, there's a specific type of product that we go under this Perlindungan Tenang scheme that we have, which are simple products that are offered to the B40 group in Malaysia, basically. Those products require approval. If you were to perhaps if you were to come up with a product that's never a very innovative product that's never been launched in this market, those products would require an approval as well. But a general product that, like a normal ordinary life product or a medical plan or an investment link plan, no, they don't require approval. They go under what we call a launch and file scheme. So you can launch the product and file the product with the bank.
Dr. Suri, any views on that?
So till about a year back, we had the mechanism of file and use, which meant that the insurance companies had to file the product with the regulator and get an approval, and only then they could launch the product in the market. However, this was to some extent causing delays, and we also realized that not much value was being added by IRD in terms of the product being filed with us prior to its launch. So about a year back, we have moved to the use and file phenomenon, and wherein the companies use the product or they launch the product and file it with the regulator subsequently. And only if there is, a matter of concern that we need to raise with the insurance company, we will do it. But otherwise, we believe that the board and the management of the company is capable enough to manage the kind of products they are launching. And in a phased manner, we've almost completely opened it up, both in the life as well as in the PNC or the general insurance segment. The products are filed with the regulator only post they are launched, and maybe on a test check basis, we can look at if there is a matter of concern, or if there is some complaint, which makes us look at it, we will see that, the queries are raised in that matter. But the sector has opened up significantly, and with the intent of ease of doing business, this is a phenomenal change that the regulator has carried out about a year back, and the results seem to be much better really as a result.
So I think even to this level, you have applied a risk-based approach from
Yes.
what I gather from both of your experiences and response.
True.
Yes.
Dr. Suri, I'll move to a specific question for you in terms of capital obligations and reporting. So are companies in India required to disclose their capital position relative to the regulatory requirement?
So in India, there are requirements for one, of course, disclosing the shareholding pattern for the insurance company. That is, who are the promoters and the investors of the company. That is the capital brought in by the company in a particular financial year. In addition, there is the requirement of solvency. That is the rule-based requirement of solvency that needs to be maintained by insurance companies, and which we call as the solvency margin that they need to maintain. As of now, that is 150% requirement. And these are required to be disclosed to the regulator on a quarterly basis. Having said that, IRDA has realized, of course, this has been work in progress for a while, where we were asking insurance companies to detail the economic capital that they were having in the company for the last about 10 years. But finally, last year, we took a call that we will be moving towards risk-based capital. And that is where the framework has been put in place, whereby the companies are required to assess the capital requirements based on the kinds of risk they carry on their balance sheets. And the first QIS was launched about a couple of months ago. I think September end it was launched, and by November end they were required to be disclosing their results of the first QIS, basis which, if need be, there would be tweaking done on the framework we put in place. But the intent is to finally launch on the risk-based capital requirements from the 1st of April 2025. And that is the time when we have also indicated that we will be moving towards the IND-AS, what we refer to as the Indian Accounting Standards, which are the equivalent of the IFRS, that is the movement towards the disclosure of financial statements equivalent to the IFRS. That's the other segment that we are working on. And that's how we are moving, so that both of these things will move parallelly for the regulator. And naturally, the insurance companies are also keen that risk-based capital makes sense only alongside with the reporting requirements also being made parallelly for the IFRS implementation. So those are the two things that is work in progress, and we will be launching this formally effective 1st of April 2025. Naturally, for the IFRS piece, they need to have the previous financial year numbers as well for the reporting to happen. So actually, effectively, it becomes 24-25 financials would also have to be prepared on that basis only. So what is coming through, assumptions on the risk-based capital will also feed into their preparation of the financial statements. So both will walk parallelly, hand in hand, really. Thank you.
Thanks, Dr. Suri. Ms. Sandhu, I wanted to ask you one question in terms of interim disclosure. So what I mean by that is you mentioned that there are disclosure requirements for point of sale and then post sale. I remember one of the slides that you shared.
Yes.
And there is
Yes.
always a clause, I believe, which says there are certain terms and conditions that the insurance companies can revise on their own without seeking prior approval or consent of the client. So what happens to these amendments to certain terms and conditions? And is there a requirement that some changes would require the client consent, or the insurance company has basically effectively the right to change anything at any point in time?
No, I think that part of the fair terms policy document is you cannot make unilateral changes. So say if I give an example of if it's part of the contract that says your premiums will go up, and there is a possibility of premium increases due to adverse claims experience. That is the product that you have bought. And if that's the case, then of course they do not need your consent, but they will still notify you of the premium increase. So there will be a notification, and they will give you options in the event that you can't afford these new premium increases. But if you were to suddenly increase a benefit that is not, and that increase in benefit may result in a premium revision in the future, then that you would need to get explicit consent from the consumer before you were to just add on the benefit, so that the consumer is aware that this is not free, and in the future I might be subject to premium increases, and it's because I've added on this new benefit. So so basically, if it's part of the contract that you have bought at point of sale, then generally you would just get a notification. But if it's something beyond that, you're not allowed to make those unilateral changes without getting consent.
Thank you very much. Thanks. I would raise just one last question for you, Dr. Suri, and then maybe if you want to share any closing remarks from what you discussed so far with us. The question is very pertinent to India with, I think, 30 national languages, over 30 national languages, and more than 700, 800 regional languages. And it came at the time that Ms. Sandhu was presenting her, the disclosure requirements where the policyholders can request a disclosure to be made in the local language. So here it is, has India required disclosures to be made in, I would say, national languages in addition to regional languages if the policyholder wishes to, or is it something that insurance companies do on their own?
So in terms of policy related information, yes, the policy document as well as the sales literature is required to be made available in specified languages as well. So it is not just English. It is certainly in Hindi and the local languages as well, because that's how the reach out is there for the policyholder to understand the subject. So that requirement is very much there. In terms of financial disclosures, no, that requirement is not there. As of now, the disclosures are being made in English only. And the filings with the regulator are also all in English only. But certainly for the policyholders, the requirement of regional languages is very much there. There's no question on that at all. Even pamphlets, etc., in the local offices need to be in those languages to enable the reach out to them. That is critical for the insurance penetration.
Absolutely. Absolutely. And it touches upon the area of financial literacy as
Yes.
well that we touched on. So if
Yes.
we expect buy-in, then we need to provide the information in the language which is most understood.
Absolutely, yeah. That is a prerequisite, really.
So Dr. Suri, any final wrap-up comments from you? Any key takeaways that you want to share?
So I think what I would like to talk about is the fact that the disclosures, be it financial disclosures or the disclosures to the policyholders or any other thing that we as a regulator are doing, is an evolving process. If I have been with the regulator for about 23 years, and if I look at the journey that IRDA has, traversed, we have really grown with time, and some of those are forced changes. An event can happen which enable us to understand why it's important to have certain disclosures, be it to the policyholders or be it to the regulator per se. And certain are the evolution that we learn in terms of what is happening globally. Like there were changes on account of the global financial crisis that brought in a lot of changes as well. And then what is happening globally in terms of the environment and other things are also impacting us. And we are also realizing why it's important for all those disclosures to be there. Because if we intend to reach a particular stage in terms of climate change, then actually first and foremost is to understand the impact. Only then, we will be intervening or ensuring that our insurance companies also, play a role in cutting down on the emissions and controlling the climate change for the better. All of us believe that the insurance companies don't have to throttle the flow of funds into sectors which may be causing problems. but awareness on how improvements can be made to technology, uh, to see that, only then the investments will come in there, or providing insurance to those entities which are causing more damage to the climate, while providing them insurance cover. Also say, these are the changes you need to bring into the manufacturing sector, are things that we believe the insurance sector can play a role in terms of, a positive contribution to the climate change. Those are things, of course, we do accept that we are still taking tentative steps in that direction, but we believe that the sector can play a critical role and that too positively in terms of climate change as well. But yes, as a sector, we are evolving and we don't want to rest on our laurels. We do believe there's a big journey going forward as well. And in terms of policyholder protection, also, we believe something we are working on, which is again work in progress, is Bima Sugam, where it will be a marketplace through which insurance can be bought, simple insurance can be bought, and which will also enable insurance comparison when a policyholder comes in, to the Bima Sugam. He be provided an end-to-end solution and also be provided something which is referred to as a comparison between products to enable him to make the right choices as well. So briefly, that's all from my side. Thank you so much.
Thank you, Dr. Suri. Ms. Sandhu, the final word from you as well, please.
I thought maybe just to follow through with what Dr. Mamta said just now, maybe some of the attendees here, climate risk management is something that you could be close to their hearts as well, and they want to know what Malaysia is doing about it. I think we did issue a policy document on climate risk management and scenario analysis last year. And the document sets out principles and requirements on management of climate-related risk by financial institutions with an aim to enhance resilience of the financial sector against climate-related risk. And I believe that financial institutions will have to make climate-related disclosures, and these disclosures are aligned with the recommendations by the Financial Stability Board's Task Force on Climate-Related Financial Disclosures. And it will be published together in the annual financial statements beginning on and after 1st January 2024. So next year, you would see the first climate-related disclosures coming out. There would, in Malaysia by our regulators.
Thank you very much, Ms. Sandhu and Dr. Suri. I think this session can go on for a few days as well, because it's a vast area, extensive space that we are covering here, and you did a remarkable job of condensing quite a few topics in a very short time. So really appreciate all the thought that has gone into this. And as the last message that you both conveyed, I think new and emerging or cutting edge themes keep coming into our space, and we have to work towards policy supervision as well as disclosures related to all those areas. So thank you very much. Really appreciate your time and sharing of your experience from your respective jurisdiction. Just for our participants, I would like to encourage that you consider the Toronto Centre notes in this context, because our topic today was public disclosures. So we do have Toronto Centre notes which look into disclosures from a conduct, financial literacy, as well as climate risk and climate change risk perspective. So do consider those as you move into your own space of enhancing your regulation and supervision around that. With that, thank you once again. Thanks to our panelists as well as the audience for very interesting thoughts and questions to encourage us to share our experiences. Look forward to meeting you again. Thank you.
Thank you so much. Thank you, Avinder. Thank you, Richa. Really appreciate the participation. Thank you.
Thanks, Risha. Thanks, Doctor. Nice meeting you guys.
Thank you. Bye-bye. Bye.
Bye.